Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5. On today's show, I'm going to focus on the S&P. I'm going to start with a really long-term time frame and then work my way down until we see the short-term trend. During this process, I will be covering price, trend, and momentum in all 5 time frames. This type of analysis, I think, can be very helpful in determining how we finish the year. So let's go ahead, and what I want to do is just lay the foundation here. So this is a yearly chart in this bottom left, right? And then we have a quarterly chart in the bottom right. I've got a monthly up here, I've got a weekly in the middle, and a daily chart in the upper left. So as many of you know, I like to look at multiple time frames. And what we're going to do is we're going to start in the mega trend here, the massive trend, looking at a yearly chart, work our way down to the quarterly, back to the monthly chart, then to the weekly, and then finish off with the daily. And we should have a pretty good sense of what to expect over the course of the next 3 to 6 months. So let's start with this yearly chart. And I want to expand this out because I want you to see what's really going on. Now, I recognize the strength of the momentum here based on both MACD and ADX, and I'm not saying that it's not important, but there's such a massive lag to that. It's not going to give us all that much help. Typically, when I'm looking at the yearly, there's a couple things I like to look at. Number one, how far am I in relation to the 18? Again, not that that's important to any kind of decision making right now, but it gives me a sense if I'm a long-term investor, whether I'm getting a good opportunity here or not. And, through this period back here, really back around 2008, 2009, 2010, in that zone as this was dropping and coming into the zone between the 18 and the 40 year, we had a pretty excellent opportunity if you're a very long-term investor. These are great chances. They don't you obviously don't get them all that often, but you want to be on the lookout for that when it takes place. Now, when we zero in on what's really happening this year, we essentially we closed the year right here, right? And then we opened right about the same level. We tried to make a little bit of a push to the downside and now have been pushing up. If we notice what happened, we have the high of last year here and the low of last year at this level. It's a very high probability this is going to be an inside year, meaning we're going to stay inside the range of last year's price action. All right, now we could push up a little bit more again, potentially, or we could sink back down closer to the 4 here. And so, but it just looks fairly obvious, especially based on the fact that we started the year so far below the 4 MA, kind of split that I think it's going to have a really hard time pushing through these two highs. Seems more likely, again, that we're going to have some form of an inside bar for the year. Okay, this is very important when it comes to looking at what this could be prepping for. It could be prepping for, some kind of a breakdown next year or for a fresh breakout into something more significant to the upside. So I think if we keep that in mind, the odds of some type of a range-bound trading seems a lot more likely than going ahead and breaking to new highs this year, at least when I'm looking at this current chart. Now, what I like to do, I like to look at the quarterly because the quarterly gives us a lot more opportunities during the course. So if you look at, I mentioned the low here in 2009, 2010, and how that was a great opportunity on the yearly chart. But look at all the opportunities we've had here. This was where it was crossing and getting these moving averages going. Look at this pullback toward the 18 MA. And that was essentially a pinch play on the quarterly. Look at another test of a rising 18 quarter line. Look at this. This was a violent sell during 2020 drop and obviously came into the zone. But look at the slope of these moving averages. So if I'm looking at trying to look for periods where I want to add to, say, my IRA, my 401k, and be a longer-term investor, this is the chart that is going to give us those opportunities. Now, if you notice, if you look at what's taken place, the MACD crossed its signal line way down here and stayed above throughout all of these pullbacks until this last drop. Okay, so each one of these pullbacks still had decent upside momentum based on the MACD. There's been confirmation both to the upside and to the downside because we haven't broken the signal line. And now we've gotten this pullback. So what does that mean? I think it's telling us that the trend has weakened somewhat, but more important to me, it doesn't necessarily mean a big reversal is on the way. Because the momentum on the ADX confirmed, I could see this rallying up and coming back down and forming some kind of a W shape to the quarterly chart. It increases the likelihood and it also strengthens the case of what I'm saying about this inside year. It seems like looking at the quarterly chart that we really have a higher probability of this coming down from here rather than just going straight back up because of the fact that the MACD is below the signal line. I would also mention the fact that the ADX is dropping back down below 25, it appears, and the green DI really is not staying above 25, showing real strength. So all of those are saying that we've got some issues. Now, I do like to look at the bars, and if you notice, look at the size of this bar. See this huge bar? We made it through the midpoint, which I think is very important. It's a sign of strength coming back to the upside, but we haven't made it through the upper end yet. This is kind of where we failed. And again, that could lead to a little bit more consolidation. So all of these things are pointing to, especially the MACD, this big red bar, and what's going on the yearly chart. The odds favor this not breaking out this year. In other words, staying contained inside last year's high, not taking that out this year. Let's go ahead and look at the monthly chart because this is another interesting situation where we have had really a pretty long move to the upside where the 18 on the monthly chart started rising back in 2011, and then it flattened here, but it never turned down. Maybe flattened a few times here, but never turned down until we got to here in 2022. We finally turned down the 18-month line. So we go up for about 10, 11 years, and then we just turn down for what, 6 to 9 months, and now this is going to just turn right back up and start a new uptrend. I'm of the belief that that's less likely. And again, when I look at this chart, it looks more sideways. It's not in an uptrend. I think that just tells me that range-bound action is the highest probability. Now, I do think there's massive support when you come down towards this 4,000 area. I also like the idea that the MACD has crossed above the signal line to the upside. So there's a little bit of underlying improvement in the bias based on what's taking place on a MACD basis. But you can see just based on the way this is played out, it almost looks like a V-bottom in a way. And most of the time, there's going to be some kind of a ledge forming here, even if it's at the upper end and it doesn't pull back a lot. Maybe it doesn't pull all the way back to the 18-month, but it should spend some time consolidating and working sideways. So let's go and take a look at the weekly chart and get a little bit more of both the weekly and the daily are going to give us a better sense of the immediate action that's taking place. So when we look at the weekly, the move here, this leg to the upside from March, had a lot of strength. Look at the MACD hitting a new high, confirming the whole way to the upside, and look at the reading we got in the ADX and green DI on the way to the upside. So on this move, we have momentum confirming the uptrend, right? And that's, to me, that means that we should be expecting a pullback to hold, and we should be on the lookout for another test of this high and maybe even a marginal new high. Now, I want to go back for a second because I know I said that it looked like we were going to have some problems, but keeps on the quarterly chart. But keep in mind, the quarter is not over. We still have some more time. This is only August, so we have another month left. And it is possible this could push back up, even go to another new high during the process of forming this new potential peak, okay? And the same thing holds true on the monthly. Nothing will really change if this weekly momentum causes us to bounce here and work back up and test this high or even make a marginal new high. Now, another thing we have to keep in mind is during this pullback, we got our first crossover to the downside of MACD. Just like I was talking about on the quarterly chart, we're getting the same thing developing on the weekly chart. Now, because there's so much momentum here on an ADX basis, I don't typically expect the crossover to mean we're going to make a big drop and this is just going to fall down like this. Most of the time when this happens, we get a rally up and fail at the 50% mark and then come back down and test this area. That test, the move back down to the 18 on this test, will tell us a lot. If it fails here, then we're probably going to have this line coming, the MACD line, working its way down a little bit more, and we're going to have a more complex correction on the monthly, and we'll probably work our way back down to support on the 18-month line. So how this plays out, which I believe wants to rally in the short term, and if we don't get a rally over, say, the next 2 to 4 weeks, and it's just like it stays like an inside bar for the month, I would view that as somewhat of a negative. I mean, we should get some kind of a bounce back up towards 44, 4,500. Again, the 50% retracement is kind of the target for this rally. And then I would be looking for another test. That test to the downside will be incredibly important as to how we finish off the year. Now, we want to go down and look at the daily chart here briefly, simply because we have had a move to the downside that is broken the 18, and now the 18 is below the 40. Do you see how this trend is actually negative? So we have a bearish trend in place where we're moving to the downside. MACD is actually crossing the wrong way, right? And we're getting a rally back up into this resistance zone. Again, the 18 and the 40 on this time frame are going to act as resistance now, I think, on a rally. If we can get there, if we can get a little bit more of a rally, it may or may not happen. We're above the 4. Let's zero in on this for a second. We're above the 4, so this could come back down, try and make another push, and then hit these two lines. And we could form a pinch here where the MACD just gets back to the 0 line, or we could just get back to the actually gets back through the signal line but fails at the 0 line. If you notice, we have some sign of a little bit of selling taking place, but it hasn't caused the ADX to get above 25. So from that standpoint, this is still okay. This trend is still okay. We can make a move up, come back down, and still turn back up and confirm what we're seeing in terms of the strength on the weekly chart. So by going through all of these time frames, I think what it's telling me is that we should be on the lookout for some kind of an interim bounce, short-term bounce. If it materializes into something important, and it might end up coming back down and testing this area first, if it can go back up and show some strength and show real strength to the upside, then we could have a decent little push that tests the highs a little bit more. I'm more inclined to believe that we could push back up to maybe 44 or 4,500, come back down, and then maybe break the 18 and consolidate a little bit more. Just based on my bottom-up work, it seems like it's going to take a little bit more time for things to get going back to the upside. So these are the types of things I think I'd be on the lookout for. I hope you have enjoyed this segment. You can contact me through LinkedIn, Twitter, or find my research on RabilStockResearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple timeframes, I am offering my book in PDF format at a discount. Go to RabilStockResearch.com/book for more information. Have a great trading day, and I'll see you next time.